Welcome, everyone, to the Information's TITB. My name is Akash Pasricha. It is Monday, August 24th. Today on the show, we are diving into some new reporting, the information published over the weekend about Nvidia's price hikes for its chips, and also discussions about an investment in Perplexity. We'll then bring on the CEO of Starcloud, the Orbital data center company that raised money at a $2.3 billion valuation a couple days ago. And finally, we are going to close out the show with our Amazon reporter who has a new story out this morning about why the platform is becoming so important for independent merchants after they used to shy away from selling on the website in favor of D2C. It's going to be a great show, so let's get right on into it. Nvidia is raising the prices of some of its flagship chips. My colleagues Phoebe Liu and Amir Afradi wrote a story about that over the weekend. I want to bring on Phoebe to share more about what is going into this decision. Phoebe, welcome back to the show. It's great to have you here.
Great to be here.
Okay, so is this all memory chip price hikes or what's going on here?
Yeah, so I would say it's mostly driven by memory, but I think a lot of things are in short supply right now. So the price hikes are about 17%, and they apply to shipments of NVIDIA's kind of last generation Grace Blackwell 300 server racks and current newest Vera Rubin 200s. And it would be for shipments that are set to arrive kind of early to mid next year. And I would say that memory prices are the biggest driver of the increase, but I think also storage and networking are starting to play bigger roles as well.
Now, I mean, you said memory is the driving factor here. Can Nvidia not just lock in prices for some of these memory chips? I mean, to the
Trust me, they do. They try it. They do everything they can
okay,
to
but what
negotiate
is it? They're
good
they're just
early.
so
Yeah.
big that they can't get all the memory they need, or what?
Yeah, I mean, I think literally, NVIDIA is investing money into some of these companies to try to kind of get them to produce more, just because they physically can't even produce as much as NVIDIA and the rest of the world needs right now. Yeah, I guess on pricing, NVIDIA renegotiates pricing agreements with the three biggest memory suppliers, so Samsung, SK Hynix, and Micron, periodically. So every time they kind of renegotiate, there would be base price changes, and then there are also additional fluctuations with like the various suppliers that also help procure memory and kind of put the individual components into the server racks as well.
Is there any discussion from the people you're talking to, customers? I mean, my sense is people are not going to buy less Nvidia, but I don't
No,
know. I
I
mean,
don't think
that's
so. Yeah, I
so
think
so
people.
this is
It's yeah.
just this is what business as usual, I guess.
Yeah, and it's also unclear kind of how exactly this will affect margins. I assume that most of the price increases will be passed on to the end customer. That's what the server people that Amir and I spoke to also said. But one interesting point from one of my interviews for that story is that some people are starting to expect that memory prices might eased up a little bit shortly after Q1 of next year. We will see whether that will happen. It depends on kind of whether the big suppliers are able to actually build out additional manufacturing capability by then. But if they do, things could get better.
Right. Well, and I should say that it will be interesting to see then if these prices come down because on one end, if your customers are get used to paying the higher price and it doesn't affect demand, I mean, I don't know. Maybe there's an argument to make saying, well, it's just extra margin for us.
You
The
can
commodities.
ask Apple about that one.
Well, I know. Yeah, I'm curious to
Yeah.
see what happens.
Mhm.
But I mean, look, the iPhone demand is different than the Nvidia
Yeah.
demand in the current moment. So
Mhm.
that might be a little more elastic. Phoebe, I want to ask you about another story that you published over the weekend with Amir and with our colleague Valita Pau. So you had some exclusive reporting about Nvidia thinking or talking about investing in Perplexity. Tell us more about what we know there.
Yes, so right now, NVIDIA is thinking about investing kind of multiple billions of dollars into Perplexity, which has kind of AI search chatbots and AI agent products at a $30 billion valuation, which is about 50% higher than the company's last round. I think last fall. What's really interesting about this deal is that talks were previously around kind of a license and hire deal, similar to what NVIDIA did for Grok, for Infabrica, for just I think last week, poolside. Similar to that, but somehow, some way, it morphed into more of a traditional equity investment.
And so, I mean, let's talk the poolside deal was interesting. It was a $6 billion
So
licensing
crazy.
deal that was
Yeah.
reported by Newcomer initially.
Mhm.
So this deal, I mean, why is NVIDIA going for the model companies now? What's the ambition here?
Yeah, totally. So NVIDIA over the last year has really ramped up its investment in developing its own models. And uh, NVIDIA's AI models are all pretty much open source, open weight, every kind of everything. They release the weights, they release the training data as much as they can. They release methodology, environments to help customers fine tune on top of those models. They release everything essentially for free. And the idea is that it's not just charity. I'm sure NVIDIA, yeah. Anyway, it's like a very business-minded decision. The idea is that if more people, outside of kind of the top few firms that buy a lot of NVIDIA chips can access, affordable and, like, pretty good and fine-tunable, open source models, they will want more compute and therefore buy more NVIDIA GPUs. And I assume they have some kind of mathematical model internally. Would love to see it, on how exactly that would drive sales, but I think that's the thinking behind it.
Right. So, on the Perplexity front, remind me, Perplexity, do they make their own models, or my understanding was I thought they really, I mean, they have a great tool and Perplexity computer use, I think it is, like
Yeah.
the agent that they have that's been driving a lot of growth for them. Are they developing their own models right now? What's the state of that company?
They're not, I think what you said is exactly right. They I would say, like, within their tools, they kind of have software that routes, particular AI tasks to
Right.
different models, including models that they've, like, post-trained on top of existing open models. So they don't develop their own models, but I think, the way Perplexity and NVIDIA work together, kind of involves collaboration both on kind of hardware design, because Perplexity has users and shares a lot of kind of anonymized data around real world applications for AI to kind of inform how NVIDIA both trains its own models and kind of develops its hardware.
Right.
I talked to someone who said the companies meet literally multiple times a week to discuss all of these things. Would love to know more of the specifics of what exactly they collaborate on, but I think the companies have gotten quite close.
And what's the status of Perplexity's business right now? I mean, I remember a year ago,
Mhm.
this was a company that seemed to be have a new funding round like every other month. We were talking about the sequential funding rounds. It then kind of, I don't want to say went quiet, but we stopped hearing about the funding rounds. It seemed to
Right.
focus more on product. How's the company doing in terms of revenue and growth right now? Do we know?
Yeah, so I think grain of salt because this is annualized revenue, so a revenue for a given month times 12. It seems that from conversations that we had, Perplexity's annualized revenue is around 750 million right now, which is a significant uptick from just a few months ago. Not entirely sure what's driving that demand because I agree. I feel like they went a little bit quiet in the past year or two, at least in terms of media attention. But it seems like the business is, humming along.
Right. Last question for you, Phoebe. I mean, as it relates to NVIDIA's model push here, developing these models, what are the open questions that you have right now with respect to how it's looking to build out that function? And we also have earnings coming up this week. I mean, I wonder if you're watching for any specific comments from Jensen along these lines of building out the Nemotron family. I mean, what should we really be watching for?
Yeah, so a couple of things, I guess on the heels of the crazy poolside deal, uh, wondering just how good NVIDIA's next open model is going to be. I've heard that it's about 1 trillion parameters, which is smaller than today's current leading edge models, but bigger than anything else NVIDIA has released in the past. And yeah, curious if kind of the pool side people will help make that even better. And then if NVIDIA's models end up being competitive, like the best of the best, if that happens, curious as to whether they will ever charge for them. They've insisted that they never will, but I feel like they're always searching for kind of a new revenue stream because
It's not
with earnings
charity, as you
coming out.
say. It's
Yeah,
Jensen's not running a
it's
charity.
definitely not charity, but I think the market just expects so much out of NVIDIA's earnings. Like, I think, NVIDIA is expected to report, like, 90+% revenue growth, but, like, the market might still be disappointed, which is crazy, so I think, Jensen and his team always has to keep looking for kind of the next big thing, because they're already so dominant, in AI hardware. It's like they need to think about robotics, about
Right.
model making, about so many other things, and also kind of for earnings, really interested to see what else they'll share on kind of all the financing and the backstopping and deal making that they're making and how that might affect how investors are perceiving NVIDIA's credit and how it's assessing its risk.
Great. Well, Phoebe, I want to thank you for coming on. That is Phoebe Liu, our NVIDIA reporter here at The Information. Starcloud, the fast growing startup building orbital data centers, raised $250 million at a $2.3 billion valuation. The funding round included Nvidia, Cisco, Benchmark, 776, and a whole host of other investors. I want to bring on co founder and CEO Philip Johnston for a conversation. Phil, welcome to the show. It's great to have you back.
Thanks so much for having me.
Congrats on the funding round. I want to get all the updates on the company's operations. We've had you on a couple times with all the SpaceX madness, but last time we had you on to talk about your company was in November, and you had just launched an H100 on board a SpaceX vehicle, I believe it was. And we haven't had an update since then. So give us the update.
Yeah, for sure. So with that H100, we then trained the first model in space. We trained Nano GPT from Andre Karpathy. We then also ran the first version of Gemini. So working in collaboration with Google DeepMind, we ran a version called Gemma. It's like a cut down local version. And then we also have been running high-powered inference on satellite imagery, particularly on SAR data, so synthetic aperture radar, which is very useful for many sort of government and military applications. In March, we announced the raise, 170 million raise at a $1.1 billion valuation, led by Benchmark and EQT. Just Friday last week, we announced an extension to that. So another 250 million at a $2.3 billion valuation. And yeah, significantly, we had Nvidia investing in this round, as well as Cisco. And it was led by Manhattan West Fund in LA that was sort of early in SpaceX.
So is it? Let's go back to sort of the launches. The H100 you got up there, you used it to train some models, and it was that chip that you used to then work with the Gemini team as well.
Yeah, exactly. So
Okay,
yeah, the first spacecraft we had 5 GPUs on there. The most significant one was definitely this NVIDIA H100. Three of them were from NVIDIA, two from ARM. But the H100 was the thing that we used for all of those workloads, so training, inference, and also fine tuning of a model.
right. And so, what is the timeline now from here? What does the roadmap look like going ahead with these launches? When are we going to see more chips in space from you guys?
Yeah, so in Q1 next year, we've got 2 launches booked. And then also in Q3, we've got another launch booked. So 3 launches going up next year. That's our Starcloud 2 satellite. So it's a much more capable spacecraft. It's about 100 times the power generation of Starcloud 1. It will have by far the largest commercial deployable radiators in space, as well as many more H100s and Blackwell chips, Bitcoin mining ASICs, and all that other good stuff.
Right, right. Tell me, I've been thinking a lot about, and we've had a couple other orbital data center folks on the show. Cowboy Space Corp is the other founder that we've had. He described his approach to us in terms of he wants to, uh, it's a he wants
Build
to
the
leave part of the part of the vehicle up there instead of bringing it back down, at least as far as the satellites go. So, look, everyone has their own approaches here. And look, the big debate is if and when orbital data centers will pan out the way you and founders are advertising. But I want to get into some of the more nuanced debates here on approach. If we sort of compare you and all these other companies, what are the more micro debates that are playing out in terms of your approach, and then SpaceX's approach? Blue Origin is trying their own um, constellation of launches, although that one's going a bit slower. Compare and contrast all these for us.
Yeah. So the main difference between us and Cowboy Space is Cowboy is building their own launch vehicle. So I mean that is certainly, yeah, that's certainly one approach. Yeah, people have built launchers before, so they should be able to do it. But it is a very capital intensive and time consuming process to build a launch vehicle. So yeah, I mean,
Well,
as I
and
said,
I'm not even really, I think, look, building, that's a big difference here between you and them. But I'm talking more about the scientific debates that, on different approaches of getting orbital data centers. I mean, are there any other sort of hot button issues that researchers are thinking about right now? Is it pretty straightforward, or are there different ways of
I guess there's only one sort of outlier, or there's one company doing it a bit different from most, which is Sophia Space. Is, as I understand, doesn't have active cooling. All of the other companies, so us, SpaceX, probably Cowboy, well, definitely Cowboy actually. Um, Google's Project Suncatcher, and also Blue Origin. We all have this active cooling loop, so you have a radiator which you run coolant through, and then that goes back to the chips and then heat it up and back out to the radiators. The main difference with Sophia Space is they have a passive cooled architecture. So they have this panel of solar panel, and the chip is in the middle of that panel, and all of the heat from the chip will radiate away on the other side of the solar panel, essentially, which means they don't need cooling loops. The downside of that, of course, is you can't run very power dense chips because you need to spread heat from those power dense chips, otherwise the whole thing just melts. So, but because you can only radiate heat at a certain amount per square meter of surface area, and so the purpose of liquid cooled architecture is that you can spread that heat across a much larger surface area, which enables you to run then much more power dense chips.
Right. Now, the other issue that I've been trying to pay attention to is how you actually get the compute back down to Earth. And there's optical links as one way that people are trying to develop further. And then there's radio links, which is sort of the more popular version of this. Which of those two ground link connections are you trying to rely on?
Yeah, so for now, almost all space to ground links are RF. Space to space is very quickly moving towards optical, and so our second spacecraft has three optical terminals. The first one actually only has these RF antennas to connect to the ground, but our second spacecraft has three, including two Starlink terminals, which enable us to connect directly into Starlink. And then, in the same way that when you use a Starlink terminal on a plane or something, you have very low latency connectivity. Through the Starlink network, we'll have very low latency connectivity to anywhere on Earth. Um, Over time, it does look like the industry is moving to space to ground optical. The problem with that is obviously if they have cloud cover and you have attenuation in the atmosphere, that can significantly slow down the data rates. There are places in the world where you have much less cloud cover. So the Atacama Desert in Chile, for example, there's a lot of optical ground stations being built on the tops of mountains in Hawaii and things like that. But for now, almost all data going from space to ground is RF right now.
Right. What's the pitch from you guys to customers using this compute? Is it that one is certainly how you sort of establish these data centers and the costs associated with that, and I think the industry is sort of broadly pitching this idea that once we get this technology developed, it will be cheaper to set up a data center, which is the ambition. The other half of this is then the unit economics of the compute itself. Are you pitching that the unit economics of using compute is going to be cheaper?
So it depends on the time frame. In the next 2 to 3 years, it will not be cheaper because the launch cost is still quite high.
Right.
So the business we're going after for the next few years, at least, is we are mainly selling to other space users, particularly various government entities and Earth observation constellations. For that, that business works very well with just the Falcon 9 launch cost. Um, Over time, as the launch cost comes below about $500 a kilo, then yeah, to your second point, it will be cheaper on a per unit of compute basis, per token or per watt, to run this in space because we have just lower energy and infrastructure costs in space, including the launch cost.
Right. And where are you gonna make your all of your, equipment and satellites and everything?
Yeah. So right now we're in Redmond, Washington, just down the road from SpaceX Starlink and also from Amazon's Leo constellation. Yeah, something that people don't realize: 90% of all satellites launched in the last few years were designed, built, tested in Redmond, where we are.
Right.
We're about to open a much larger facility just down the road in Woodinville, about 100,000 square foot facility, at least 10 times the size of what we're in now, to set up more of a manufacturing line, to start producing these.
So is it all, like, former Boeing people that work at at these companies? I mean, Everett is just a stone's throw away. Is that the reason that this industry has popped out over there?
The initial reason, I mean, ourselves, we don't have any Boeing people. About half our team came from SpaceX, and then the other half from various hyperscalers, Microsoft and AWS. I think in the early days, the reason it was here was there was a very strong RF team at Microsoft, and also there was a strong team at T-Mobile, and T-Mobile's headquarters and R&D is all just down the road. So that they were particularly, things on working on cell towers and things like that. So
Right.
that back in 2016, I think they started. SpaceX moved up here, and I think it was for that reason. And then yeah, and then the talent's just grown.
You're 25 people right now, I read?
Yes.
And I mean, a year from now, how big are you trying to be?
We'll be 50 by the end of the year. Yeah.
You need people to make the satellites. It's
Well,
pretty
yeah. I mean, so we're only launching. I mean, Addy and Ezra did the whole first spacecraft by themselves, essentially, the payload and the antennas and everything. That was two people. Starcloud 2, I think, will essentially do with like 15 people. And then we've got 3 launches of Starcloud 2 next year. So, if we have 100 people, it's not,
right,
yeah. But until Starship is flying frequently, we cannot ramp up real cadence on
right.
Starcloud 3.
Great. Well, Phil, I want to thank you for coming on. Some exciting developments, and look forward to having you on more as there are more questions to debate and discuss on the space race. That is Philip Johnson, co-founder and CEO of Starcloud, here on TITV. Companies that used to rely on direct to consumer sales are finding that Amazon is becoming a more attractive distribution channel. Our Amazon reporter, Catherine Perloff, wrote a deep dive on that trend this morning in an exclusive story. I want to bring her on to share more about what she found. Catherine, welcome back to the show. It's great to have you here.
Hey, Akash.
So, what's going on with these independent merchants and Amazon right now?
Yeah. So Amazon is becoming a bigger source of their sales. 10 or so years ago, there was an idea that the internet could kind of democratize retail and cut out the middleman of the big box store. And also cut out the middleman of Amazon. Amazon has been around for 30 years. But that is becoming harder to do for some reasons we got into. And yeah, Amazon, for a lot of merchants is becoming sort of their biggest, fastest growing retail channel.
And I mean, you spoke to a number of independent merchants for this story, and I just want to make clear. I mean, we're talking basically about these brands that I used to buy from tons of websites on their website. Brands that used to rely on direct to consumer. The websites, I guess, have become less popular now. Is the idea, right?
That's right. Yeah. I mean, it's still a viable sales channel, but it's not something you can necessarily rely exclusively on. People used to see Amazon as sort of optional. Maybe you put a couple products there, but you want to drive all, sales traffic to your own website because you have higher margin on your own website. You don't have to give up the fees to Amazon or other retailers. But the economics that sort of made that make sense are more challenging now.
Okay, why is that? What's so great about Amazon or what's so bad about DTC?
Yeah, I mean, and listen, I don't know if there's still a lot of challenges on selling on Amazon, and there's still a lot of fees.
Which I
But
wanna get into that too. I mean, I wanna get into sort of the double-edged sword here, but I mean, why what's so attractive about the channel right now?
so D2C became harder for two, maybe three main reasons. First, ad costs got more expensive. And I think partly just as the model became more popular, that means more people are trying to do it, more people are paying for ads to drive, shoppers to their site. Uh Between 2021 and 2026, ad costs on Google and Meta went up more than 20%, and actually have not gone up as much on Amazon. So that's one thing. Another thing is it is harder to find websites now than it used to be. Google has sort of changed the UI of its search engines. So now you see an AI overview. There might be a few websites in there, but certainly not as much as when, it was just 10 blue links. And that has made a lot of merchants who rely on their sites get less what they call in the business organic traffic. So traffic that doesn't come from ads. So it's just harder to find their sites. So, um, it used to be that, yeah, maybe less people would come to your site than Amazon because, Amazon is a big clearinghouse where everyone knows about, but it was cheaper to get those people to go there. And now it's more expensive to get someone to go to your site. And I guess the last thing that, and we can talk about this more later, but like the trust factor of Amazon has maybe increased a bit. People have told me that uh, people who find brands on TikTok are more likely to buy things on Amazon. And I think it's partly people sort of have been trusting reviews more. I think TikTok sort of encourages this sort of, you know, familiar style, not influencers of just like, this is a product I liked. And I think people kind of trust the reviews on Amazon that you can see and don't always trust reviews on brands' own websites. So
I
those are a
thought
couple
I
of,
thought half of these reviews were like AI generated. Was that am I dreaming?
I mean, I don't know. I think though
I don't
people
have any data here. I just it was there's I don't know, there's discussions among
No,
me
I
and my
mean, I think
friends.
it's always great to think about, like, are the reviews legit? There's lots of review manipulation going on everywhere, but I think that the idea is that reviews on Amazon are more legit because Amazon has less of an interest to promote any one product than obviously a brand on their own website. And yeah, I mean, these reviews are so effective that one brand I talked to, Flex, which is a menstrual product, started printing the Amazon reviews on their Subway ads because they were so effective. And another sort of sign of this Amazon trust boost is that an e-commerce consultant I talked to found that if someone buys a brand on Amazon, they're more likely to then maybe try it and buy it on the D2C site, but they kind of need to know that they can return it on Amazon, which Amazon has a good returns policy. They don't necessarily trust the D2C site as much to let them return it, that it's good, etcetera.
Right. Okay, so what are the costs here? I mean, is it all great selling on Amazon? I mean, some of the brands you talked to in the story said that Amazon is now, in some ways, their biggest customer, which is significant. Are there costs that come with that?
Yeah, I mean, Amazon is, there's a lot of problems. You give up a ton of fees. You're in their ecosystem. You have to buy ads to stand out. You often are sort of linked with their logistics network. Um, there are a lot of costs of selling on Amazon. Um, but you have a lot of people coming there. And so, yeah, the margins are definitely not as good as D2C. Um, and then, you also are sitting there on a shelf, a digital shelf next to all your competitors. So, and you don't know at what moment will Amazon's algorithm change and you're suddenly out of favor. And sometimes it doesn't feel fair why that happens. But it's sort of, retail exists for a reason. It's easy. People like to shop at a place where they can compare lots of brands. And I think at some point people thought e-commerce could, yeah, democratize that and make it easier to just find one brand that you like. But I think we're seeing kind of similar dynamics that we've seen on in e-commerce that we've seen, in physical retail, where sometimes it's kind of a winner take all, where sometimes the big
Right.
retail stores, think of a Walmart or a Target.
So
you know,
let me ask you. So as you talk to these merchants, I mean, I wondered if you net things out. So they're selling less, maybe through their D2C websites. Um, is this a survival play for them? Or if you I guess maybe the question I'm asking is the health of independent merchants, broadly speaking. If you look at their total sales, is Amazon helping them grow their total top line, broadly speaking? Or is this a story where Amazon is helping them to sort of fill the gap a bit, but right now it's still pretty hard to be an independent merchant?
I think that a lot of merchants are doing okay. I taught this brand Flex, they're growing, they're doing
Right.
fine on Amazon. Um, and Yeah, I think that, Amazon has obviously their Amazon statistics, but they publish some statistics that, like, the amount of sellers making more than $1 million on their platform in sales has grown. The average amount of annual sales has grown something like maybe around 30% year over year. So brands are growing on Amazon. I think the big question, and people are still discovering brands. And to the point I made earlier, you might try a product on Amazon and then go buy it on the
Right.
D2C site, especially in a category like a consumable, like a shampoo or a toothpaste where you use once, then you have to replace it, and then you're more willing to buy it from the merchant directly. So I think that brands are still okay. People still need to buy stuff. But definitely Amazon has more power in that transaction, and it does affect the margin profile.
Is TikTok Shop then, based on what you said earlier, it sounds like TikTok, although it's a discovery engine, it's not posing much competition right now in terms of, I mean, comparing TikTok Shop to Amazon is probably, a not so comparison, but, it sounds like it's just a discovery engine and that's it right now.
I think for some brands, it is working. I've heard that it is growing fast for some brands, but I think it's sort of like, it's interesting. We're talking about Amazon now. This is 30 years after it's existed. And like, now it's like growing faster than ever. So I feel like it takes a really long time for consumer behavior to change. And I think
Right.
while TikTok Shop is growing fast, probably not for all categories equally. Like, I don't know how many people are buying couches on TikTok Shop yet. Um, like, I think that maybe in 10, 15 years that changes. But right now, Amazon is sort of, accruing a lot of the growth in e-commerce. And I think, yeah, another part of this story is that e-commerce really boomed in the pandemic. It kind of slowed down. But now if you look at census data, we're sort of past pandemic levels of e-commerce sales. So right now, Amazon is sort of booming from very slow moving consumer behavior more and more to e-commerce. We'll see if TikTok Shop can benefit more,
Right.
and it might take another 10 years. I don't know. Yeah.
Great. Well, Catherine, I want to thank you for coming on. That is Catherine Perloff, our Amazon reporter here at The Information. That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. If you can't make it then, episodes are available on theinformation.com, on our YouTube channel, or wherever you get your podcasts. Make sure to follow us on social media, on X, on Instagram, TikTok, and LinkedIn. I am already excited for our next show tomorrow. Have a great rest of your Monday. Bye-bye for now.